Now, normally making about $60 million in a single trade is a great day when you're engaging in options trading. Unfortunately, this same trade triggered every single alarm bell imaginable, because right now the Justice Department and the SEC are investigating a very suspicious option trade made by the billionaire entrepreneur Barry Diller, the chairman of IAC and Expedia, and also the founder of Fox Broadcasting, his stepson Prince Alexander von Furstenberg, and his close friend David Geffen, the founder of DreamWorks. Now, right off the bat, some people in the industry, and especially the people at CNBC's Squawk box, said there's no way these guys would engage in insider trading. Although they are clearly biased, it is understandable since Barry Diller is worth over $4 billion and David Geffen is worth well over $10 billion. So obviously these two don't need a quick $60 million in profits. However, just being rich is not an alibi for engaging in illegal financial transactions, and that's why you have to look at the evidence, which is exactly what the Justice Department and the SEC are doing right now. Because when you place an order for a call 40 option to buy 4 million shares at $40, and the very next trading day the stock rises from $65 to $82, a 26% single day increase, that is indeed a highly suspicious activity and worth looking into. Now, Barry Diller clearly stated that all three of them had no information whatsoever that was not already publicly available when they made the deal with JP Morgan, and that it was just a lucky bet. However, this directly contradicts what his stepson said, which was that they were already buying Activision stock long before this trade and that he believed that the company was undervalued. So this means that you're not just making a lucky bet, you're actually doing serious due diligence and investing for a specific reason. It could have easily been a situation where new information came forth suggesting a merger announcement in the next month or the next 2 months, and then when it happened the next day, you know you're in deep trouble. You see, if you were already interested in the company and believed that the company was undervalued, you would have bought the actual stock in November or December when it hit a low of $57 following a PR nightmare, which is exactly what the legendary Warren Buffett did. Buffett bought around $1 billion worth of Activision stock in October, and after the massive decline in November, his company bought even more since they believed in the fundamentals of the company. This is normal investing behavior with a long-term focus. However, the deal that Barry Diller and his stepson Alexander made has all the markings of a short-term trade, which you only do when you expect something to happen. Before we continue, please like and subscribe to support the channel. So the trio paid around $108 million for the options, which if they wanted to exercise would cost them another $160 million, and this brings the total to around $268 million, which is more expensive than buying the 4 million shares at $63, resulting in $252 million. This means that if the stock stays at the same level or goes down, they can sell the options and cut their losses to a minor 10 or 20 million. However, if there's a sudden spike in the stock, the volatility can result in a large profit without having to risk the full $252 million. So you see, it's very important here to know, why was this trade made? Was it truly just a coincidence, or did they have any sort of way of knowing that a possible merger was coming? It will all depend on how deep the Feds and the SEC look. Are they just looking at a few business emails, accounting data, or are they going through all of their personal emails, phone calls, computers, you name it? Because you have no idea of knowing where the information came from unless you do a real deep dive into their personal lives, and I don't think that's going to happen for a mere $60 million. So most likely it will be investigated and nothing will come up, but that doesn't change the fact that this deal is highly suspicious, and if they would have been worth only $200 million, everybody would have been thinking it's insider trading. This was the Activision insider trading scandal. Please like and subscribe to support the channel.